Welcome to the Explainer. Okay, let's get right into it. There's a story that's exploded in just 12 days, going from a far-off conflict to a direct hit on your bank account. We're going to break down exactly why this new war in Iran is making everything from your gas to your groceries so incredibly expensive.
Look, it's the question on everyone's mind, right? You see your budget getting squeezed and you're wondering what's going on. And let me tell you, it is not your imagination. These price hikes are very, very real. And believe it or not, we can trace them all back to one single event that went down less than 2 weeks ago.
All right, so let's start with the most obvious pain point. You know, the one you see lit up in those giant numbers on the side of the road every single day. Yeah, I'm talking about the price of gas. So get this, $3.58. That is the new national average for a gallon of regular gas. We're talking about a 20% jump in less than 2 weeks. That's a direct fallout from this conflict. And for most families, that's a huge, sudden new expense to deal with every single week.
But you know, the pain doesn't stop with your own car, not even close. Take a look at diesel fuel. It's up a staggering 28%. Now, why does that matter so much? Well, think about it. Every single truck that delivers food to your local grocery store, every ship bringing in goods, they all run on diesel. So when that cost skyrockets, it gets baked right into the price of everything on the shelves. That's exactly why your grocery bill feels so much heavier all of a sudden.
So, what on earth caused this to happen so fast? This wasn't some hurricane or a random pipeline problem. No, this was a calculated geopolitical move aimed right at the world's economic jugular. And the answer lies right here in the Strait of Hormuz. You're looking at an incredibly narrow stretch of water that is, and I'm not exaggerating here, the single most important choke point for global energy. And as of right now, it's pretty much closed for business.
Now, to really wrap your head around the scale of this, look at this number, 20 million. That's how many barrels of oil squeeze through this tiny strait every single day. That isn't just a big number. It's a fundamental pillar of the entire world's energy supply. And this chart, wow, it just perfectly illustrates the problem, doesn't it? That flow of oil accounts for about a fifth, 20% of the entire world's daily consumption. Think about that. When you suddenly yank 20% of any critical supply offline, the market doesn't just react, it absolutely panics.
I mean, the impact is so massive that the International Energy Agency, they're basically the world's energy watchdog, is calling this a historic disruption. Let that sink in for a second. We are living through what they are calling the largest supply shock the global oil market has ever seen in history.
Okay, so let's get into the geopolitical earthquake that flipped the switch on this whole economic mess just 12 days ago.
This timeline really shows just how fast this all went down. On February 28th, you had joint U.S. and Israeli airstrikes targeting military sites inside Iran. Then, just 2 days later, bam! Iran hits back with its most powerful economic weapon, shutting down the Strait of Hormuz to all tanker traffic.
You know, this energy crisis really could not have come at a worse time. Why? Because it has thrown the U.S. Federal Reserve, the folks who control interest rates, into what is basically an impossible situation.
The Fed is now stuck in what economists call a policy trap. Here's what that means. If they cut interest rates to try and help the economy, which is already slowing down, they could let this new energy-driven inflation run absolutely wild. But if they hold rates where they are or even raise them to fight that inflation, they risk pushing the economy into a really deep recession. There are just no good moves on the board for them right now.
Now, what's really fascinating here is how the market is placing its bets. You can see it right there, an overwhelming 99% certainty. Investors are convinced the Fed is going to choose fighting inflation over trying to boost the economy. And what that means for you and me is that everyone expects borrowing to stay expensive, even if it means slowing things down and hurting the job market.
So as you can imagine, this high-stakes economic situation is already creating some very clear winners and some very clear losers across the financial markets.
Yeah, no surprise here, the winners are the big energy companies. Your Exxons and Chevrons are just raking it in with these higher prices. But the losers? Well, that's your tech and growth stocks. Companies like Apple and Nvidia, they rely on two things: people spending money and cheap borrowing to innovate. And right now, they're getting squeezed from both sides.
And hey, for anyone out there wondering about crypto, the data is crystal clear. Bitcoin is not acting like a safe haven right now. Not at all.
It's showing an over 85% correlation with the Nasdaq, which basically means it's trading just like another risky tech stock. When the market gets nervous about inflation and recession, Bitcoin goes down with it.
So all of this brings us to the one big final question that really matters for all of us, right? With a war choking off the world's energy supply and the Fed completely trapped with no good options, is this what we should expect now? Is this perfect storm of high prices and massive uncertainty our new economic normal?